Hi, everyone. Today, let's talk about the economic calendar once again. Then we'll get straight into the charts. And then we'll take a look at my results for the day and my positions going into Monday. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays. So make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. Looking at the economic calendar for today, you can see University of Michigan consumer sentiment up slightly. One-year inflation expectations also up from the previous estimate, 3.9 up to 4.2. And then 5-year estimates actually the same here at 2.2. But one-year estimates ticking up here slightly, pretty interesting. And the federal budget actually came in with less of a deficit than expected. Pretty surprising by the government, but you like to see it. Hopefully they can keep up this trend before they run out of money. They're kind of already out of money, but hopefully they raise the debt ceiling and the government doesn't go bankrupt, and we can continue on spending money into infinity. Moving to Monday, we do have New York Fed inflation expectation. They're actually expecting 5% for the 1 year, so a little bit higher than University of Michigan, 2.4 for 5 years, so a little bit less. And then they actually put the estimates up here for CPI. Pretty interesting here. You can see the previous number was negative 0.1%, so an actual decrease in CPI. And then going over to the current expectation for this CPI announcement, 0.4%. So that's a 0.5% difference on the CPI number, but core CPI is expected to be the same as the previous iteration here at 0.3%. So that's interesting here. Big jump in CPI, core CPI staying flat, which is kind of expected just on how they do that data. Year over year CPI 6.2 versus 6.5, and then core CPI 5.4 versus 5.7. So core expected to continue stepping down here on a year over year basis, but this number here does make me a little nervous with a full 0.5% jump from the previous iteration. Moving over to the charts, starting with the S&P 500 on the hour and the daily chart here. So on the hour, I want to highlight that we did get a bounce off of the 200 SMA. I know we talked about that yesterday. I thought we would kind of move into it, but we ended up gapping down right to that level and then basically rallying throughout the session here, showing a little bit of strength into the close. So that's definitely interesting. We got the cross on momentum, bullish momentum on the hourly. Could certainly get a rejection here at the 50 level on RSI, so that's something to watch out for going into Monday. But right now, just a little bit of bullish momentum, pretty interesting. Looking at the daily chart, I do want to highlight, we do have this midline on the trend. We've been talking about that for a while here. You can probably move this around just a couple of ways. It's kind of hard to determine where exactly you want to put it. If you do move it up here, based on your charts, that would look more like a candle break and maybe coming back up for a retest. But the way that I had it, going back to the tops of the market here in the middle of January, this does look like a retest and a break back up above that trend line. So this does look like a little bit of support. It is worth noting that we did get some bearish momentum finally on the MACD. We figured that was going to happen. But it is interesting to see that how we gapped down and then finished so strongly on the day. Interesting close, definitely. Remember, Monday is the day before CPI, so it would not surprise me if we did get a little bit of a rally into Monday. We get CPI data. My expectation there would be we come up to a critical level, maybe even all the way up to resistance at 415. That would be pretty crazy. Get a huge rally on Monday into the CPI data, get the CPI announcement, throw some wicks in both directions, kick out a bunch of traders, and then we probably get a continuation in one direction or the other, potentially to the downside based on momentum here on the daily chart. The volatility that CPI can create can certainly create a lot of liquidity in the markets, and then you would see the market move more powerfully in one direction or the other. And right now, like I said, it looks like we're going to come up, maybe retest the highs. I think that would be a pretty strong push here on the S&Ps. But in my opinion, based on this trend, it does look like a small bounce, potentially some bullish price action on Monday. Even if we don't make it up to 415, you could certainly see a 410 test, maybe even a 412, certainly possible. Got 408, 409 as this previous low. Like I said, 410 to 412 as the next level. A little bit of a push. Some sellers come in at that point and then potentially get a sell-off into the CPI data. Moving over to the NASDAQ on the hour and the 4 hour. I know we talked about yesterday coming into that 55 EMA on the 4 hour, and that is exactly where we gapped down to. Very similar to the SPY, moved sideways throughout the session, tested that level multiple times, even got a pretty strong wick through it here on the 11 o'clock candle, ended up bouncing and continuing higher basically throughout the day. Momentum on the hourly chart also moving in the bullish direction. Similarly, you could see a test of the 302 to 303 level, looking for that gap fill. Did not fill all the way based on my standards here. You can see the high is 301.57. The close for the previous day was 301.63, so only 6 cents short of touching the previous close on that wick. Usually I want to see that wick touch the close of the candle to say that that gap is filled. Very close. You could certainly consider it closed, but it is interesting that it came up just a few cents short of touching the body of the previous day close candle. Otherwise, like I said, similarly looks bullish. Momentum stepping down here on the 4 hour chart. Hourly RSI did get above the EMA on the RSI as well, indicating a potential upswing. Certainly could come in and retest this 298.15 level where we held throughout the session, come back down, test it one more time, find some buyers, and then get a push higher. I don't think we would really get above 304.30, this previous low. Going back to Wednesday, you could certainly say 303.25 would be a strong level as well. Basically in this zone where you would expect sellers to come in. That would also coincide with this level of resistance that we had from the trend line. But overall, gap down, found some support, looking mildly bullish going into Monday. Moving over to the Russell and the Dow. Starting with the Russell on the 4 hour, you can see we came right to that support level, the 189 level we've been watching basically all week. Got just slightly below it, about 25 cents below it, found some support, and then rallied into the end of the session. Could certainly find rejection at the 9 EMA, but it does seem like we might get a stronger push like we talked about, maybe up to 192 would be a good level. That would be the wicks here from the push down on Tuesday. 192, solid resistance at that level in my opinion. That also pretty closely coincides with this trend line. Maybe just a couple of cents higher. Push through, throw a big wick through the trend, find some liquidity, and then sell off into the continuation for CPI. Does seem like a solid manipulation. That is my going in position generally overall. But of course, CPI could come in lighter and push markets higher. It's always a possibility. I don't plan to be in the markets for the CPI announcement. I do plan to close all positions on Monday, but in terms of manipulation, that is kind of what I'm looking at. Moving over to the Dow, much stronger here on the Dow. Obviously, it hasn't been selling off very strongly. Did take out all these wicks with the gap down. So gap down, filled the gap, moved basically back into the middle of that trend. Pretty close to what we said for price targets, 339. Did get a little bit above that 338 level. Based on where it is now, you could certainly see this push back up to the highs. It's only $4 off, about 1%. So 1% push on the Dow, retest those wicks, and then get the continuation. Otherwise, looking at the MACD, you can see steps down on both of these. Both of them look bullish. Dow stopped right at the EMA on the RSI, so that's interesting. You would want to see this continue through the SMA if it's going to continue. Russell wasn't quite as strong and did not test the SMA on the RSI. Either way here, you would like to see it push through the 50 line if we're going to see a little bit more of a rally on Monday. But right now, it does look pretty strong off of this support line here. Moving over to Apple and Tesla, you can see Apple gap down, filled the gap, closed basically unchanged from the previous day, showing a little bit of strength right at the trend line that we talked about, right at that 148.80 level. It's where the gap down finished, right at the trend, and then bounced. So interesting to see that. Definitely looks like we could get a retest of the 55 EMA here on the hourly. It'd be about another dollar and some change up from where we are now. It also coincides fairly well with the previous lows. Does seem like we're going to at least test those lows, maybe come up a little bit above just to stomp out some of the shorts. Getting pretty close to the 50 line on RSI. Momentum is bullish, so it's something to watch going forward. We've seen quite a few of these gap downs and rallies. Very similar to what we saw here. Sell off, gap down, rally, filled the gap, and then you get a big continuation here. So do be careful if you're short. I know this looks bearish and it looks like we might break down here, but these gap downs, fill, and continuations have been pretty aggressive over the last few weeks. Moving over to Tesla just for a moment here, we did end up getting the gap reversal that we talked about right at the 214 level. So we got up here, basically went sideways, wondered if this was going to be an island reversal. Sure enough, we gapped down and moved down back to that previous level of support at 193.50, tested that level and then bounced slightly. So Tesla definitely not looking as strong as the major indices or Apple. And this is something to watch. If this does break down, that could pull markets with it. Not the S&Ps, but definitely will affect the NASDAQ. Moving over to Alphabet and Meta, these continue to do pretty much what I thought they would. Meta came into that support level, wondered if we would get a bounce. It did bounce slightly up to the 9 EMA on the 4-hour chart, and then sold off and got rejected, basically went sideways. Did find some support though, so it did not continue to crater like it's been doing. I'm sure that helped the markets here a little bit today. Meta, on the other hand, continues to sell off. Once we saw the break of that yesterday, we talked about it. Gap down, continue to sell off. At this point, you have to assume that we're going to come down to that 167 level. That would be the next level of support. We talked about that yesterday. The next level after that would be around 157, which would basically be a whole gap fill at that point. If we did get down to 157, you have to assume that the gap is going to fill. Momentum on the daily chart is continuing to tick down. RSI ticking down pretty aggressively. So overall, Meta, not a great buy right now. Alphabet, maybe we see a bounce into the next week a little bit to help prop up some of the markets as we see the major indices go up on Monday, in my opinion. Moving over to AMD and NVIDIA, I don't usually talk about these, but they did have a structural break here today. So you can see they were kind of in this topping process, but they stopped right at resistance yesterday. And then here today, they gapped down right through that level and then basically went sideways here on AMD. Momentum did tick down slightly here at the end of day, so you could potentially look for a bounce off the 50 EMA on the 4-hour chart for AMD. Moving over to NVIDIA, similar thesis. It did have a lower high and then a higher high here before it broke down, but you can see we're below the 9 and the 21 EMAs through a wick to the upside and then sold off. Similarly, you could find a bounce here on the 55 EMA. Momentum still continuing to strengthen to the downside, which is definitely interesting. NVIDIA has been very strong on this rally. It has not really been consolidating or building a topping process. Certainly could be building a head and shoulders type pattern with a left shoulder head. Maybe we get that right shoulder here on Monday and then we break down. That would be huge for semis because NVIDIA has been so strong recently. Otherwise, going back to AMD here, you can see we have that high, lower high, and then the breakdown. If this does break below the 55 EMA, then you have to assume that we're coming back down to this 76 level, which was the previous high before we had this rally. Moving over to consumer staples and consumer discretionary. Once again, getting a little bit more rotation here. Consumer staples looking very strong. Gapped up, filled the gap and rallied. Almost got to the 55 EMA here on the 4-hour, so looking strong. Did close just below the 50 level on RSI. You would expect this to continue into Monday. Certainly could see this push back up into the 73 level based on the price action that we saw here today. So once again, we did throw a wick to the downside here, retesting this previous low, and then found some support, and now we're moving higher. Moving over to discretionary, very different story here. So we gapped down, could not get the gap filled. Then we tested that support level, going back to this expanding wedge that we've been watching here. Been watching this trend line here, but you could even draw this out, capturing more of the tops, and that really does capture that bigger top. I do kind of like this a little better though, because it did gap through that level, showing that that's probably a pretty strong level. And you can see we came back through that and now we've retested the lows here. And this is certainly an area where you could find some support. You would be looking for a lower high potentially. And if this is going to break down, that would be pretty dramatic for stocks. So once again, you could expect a short-term bounce. Maybe we get back up to that 151.50 level. Maybe even take out this most recent short-term high at 153. That would be a pretty big move, but it's possible. Come back in, retest that level. CPI comes in and we get a breakdown. That would definitely be interesting, probably would trap a lot of longs, so something to watch there. But overall, consumer discretionary looking weak and consumer staples starting to pick up steam. Moving over to transports, once again, gap down, found support at the 55 EMA on the 4-hour, could not get the gap filled, so a little bit of weakness there, but it did rally into the end of the session, did get a step down on the 4-hour chart. showing a little bit of strength. Looking at the daily chart just for a moment, you can see we found some support at the 21 EMA on that daily chart. That also coincides with basically the highs of that previous consolidation section. Not a bad spot to find a little bit of a bounce, maybe up to that 239 area, and then get the bigger sell-off. Certainly possible. You can see momentum continues to tick down pretty strongly. You would expect the cross on Monday, even if we do get a little bit of a rally. And if we do get that divergence where price is moving higher, but momentum is ticking down, that's a pretty good indicator that this is going to roll over to the downside. Even if we do get a decent CPI number, take out the wicks, move lower, maybe even create like a double topping pattern here. That would certainly be interesting, where this is kind of your midpoint, come up, retest these levels, find some resistance, and then take out this midpoint. That would really push us down to that 223, 222 level back at these previous lows, maybe even lower from there. That could certainly be an interesting scenario. But right now, it looks like we're going to get a little bit of a bounce into Monday, and we'll see how that plays out if we do end up getting that double top. Moving over to semis here on the daily chart, you can see we gapped through the trend line. Classic gap through, came down, found some support at that previous high, and then rejected a little bit from there. You can see what that looked like on 4 hour. And comparing the trend line here on the 4 hour, you can see it actually didn't break on the 4 hour. Depending on how you draw it, it wasn't actually a break on the 4 hour, but the daily chart looks like a very clear break. So just kind of depends on where you like to draw it. I think the daily chart is probably giving you a better indicator of where we're at. Seems like you could come back in, retest this previous high, retest the trend, and then move lower. Certainly possible. Momentum though on the daily chart, ticking into the red, RSI ticking lower here today. Momentum on the 4 hour continues to get more bearish. Although on the last candle of the day, you can see we did retest that 50 RSI, and the SMA on the RSI is at 52 here. So you could see a small uptick like we talked about, get a little bit of bullishness on Monday before we get that continuation to the downside, in my opinion. Moving over to stocks above their 20 and 50-day moving averages here, you can see the 20 level did gap down and then fill the gap and move slightly higher right to resistance at that 52 level, maybe slightly above 51.75 is where I had it placed. So slightly above resistance. You can see that close just above there. So slightly bullish on the reversal. Momentum is still down though. You would expect a small move higher, test the SMA on the RSI and get the continuation to the downside. Similarly here on stocks above the 50, tested that level yesterday, 62.25. This is a fairly prominent level. You can see we've interacted with it multiple times over the last few weeks. And you can see we did get the bounce at that level, indicating a little bit of strength here into the end of the day. If this does tick up here through the 50 level on Monday, we might see a little bit of bullishness into Tuesday as well. So that would certainly be interesting, something to watch for as we get into next week. Moving over to yields. Once again, they continue to go higher here, the 10-year continuing to break out. And I think this is an interesting indicator here. So it seems like the bond market is finally buying into the idea that the Fed is going to have to keep rates higher for longer, which is starting to affect that 10-year yield. But interestingly here, the 2-year is continuing to stay fairly stable. It did break out of this 450 level, which we've been watching for a while. It's starting to go higher here, and momentum is picking up to the upside on both charts. But it's not going as high and definitely not nearly as fast as the 10-year is. So it seems to me that the thesis is short-term yields are going to stay fairly flat, but the market is now buying into the idea that the Fed is going to keep those rates higher for longer, which is starting to affect that 10-year note. Looking at the RSI, they are both getting into overbought conditions, although momentum here is still ticking to the upside. Zooming out here on the 10-year, you can see we're in an area of supply, and it could certainly get a decent rejection from this level, which would correlate with a small move higher in equities. We come down in, retest this 3.68 level, and then get a continuation higher potentially. Otherwise, I'll be watching the 2-year yield to see if we can hang above this 450 level. We did throw a wick here on the 4 o'clock candle. Could certainly break down from here still. But zooming out here, you can see we've generally been within this range for a while. And the next level that you would be looking for is basically 0.04% higher than we are right now. So not a lot of upside potential in the 2-year. But like I said, the 10-year seems to be going higher. Moving over to the put-call ratio, we did finally break out above the 200 SMA on the hourly chart. Seems like people are finally starting to understand that this market is going to be moving lower. And like I said, we're starting to see that put-call ratio move a little bit higher. We're in the early stages of a down move, so it's not super high yet. It is higher than it's been here recently, indicating that there should be plenty of downside to go once we start seeing it get into this 2.2 level like we saw on these previous peaks. That's probably a decent indicator that we have bottomed, at least for the short term. Moving over to the dollar, you can see we got up to this level and rejected, so that's interesting. Once again, testing that 55 EMA, which continues to trend down. We're still stuck between the 55 and the 9 EMAs here on the daily charts. Momentum did tick up here once again today, and the RSI did step up as well, so that's interesting. We did get a higher close from the previous day, rallied through the session, did throw a wick down to the 144 EMA on the hourly chart. Pretty strong wick actually, and then rallied up to resistance. At this point, it does look like a bit of a consolidation. We're not really able to make new highs yet, and we are showing a little bit of weakness. This is going to continue higher. We're watching this previous high basically at 104. If we get above 104, that would be a breakout. Otherwise, right now, this still looks a little bit like a consolidation pattern, potentially looking for a bit of a breakdown into Monday. That would send equities higher, and you can see momentum here on the hourly chart is stepping down as well. This could certainly turn a little bit higher here with the daily momentum stepping up here today. So usually you want to look at the higher time frame momentum, but this could come down, maybe retest the 21, satisfy this downtick in hourly momentum, and then get the continuation. Certainly possible, but keep an eye on this one. If the dollar does start to break down, that could push equities a little bit higher on Monday into the CPI data on Tuesday. Moving over to JNK on the hour and the 4 hour, you can see we continue to sell off dramatically. We gapped down, moved lower, did not fill the gap, so we have a gap left. Momentum picking up to the downside, but you can see here very oversold conditions here on the hourly. Momentum starting to slow down, maybe even tick up. A couple of wicks here at the end of the day, indicating a potential for reversal. Obviously, this is not a full bottoming formation, and you definitely wouldn't want to buy this right away, but it does seem like there's a possibility that we could get a little bit of a bounce. Remember, we do have this gap left over here at 91.60 or so, the open of the candle, and that was a gap up from about 91.12 or so. So pretty decent sized gap in there. Does not seem like we're going to get that filled quite yet. I would guess that we're going to bounce, fill this gap, come into gap resistance, and then sell off. That would be up at 92.50 or so. Close of the previous candle here was 92.46. So 92.46, 92.50, right in that zone. Come in, fill the gap, test the 21 EMA, and then we get the continuation to the downside. Certainly possible. Otherwise, momentum still on the 4 hour, ticking down. You could look for a bounce here at that 91.12, 91.14 level. That would be the 200 SMA on the 4 hour chart. Not a bad spot to turn around. We're not oversold quite yet on the 4 hour, but like I said, on the hourly, very oversold on that RSI, and momentum, like I said, also ticking up here slightly. Moving over to TLT on the hour and the daily chart, you can see similar thesis, although we did fill the gap here on TLT, gap down, got the fill, got the move down, but once again, throwing a couple of wicks, showing a little bit of reversal conditions here, momentum ticking to the upside, did not quite get oversold on the hourly, came up just short, got down to 30.62. And then started to recover from there, so slight tick higher on RSI on the hour. Daily momentum, though, looking very bearish. Did gap through this 104.50 level that we talked about. And now we're coming into a potential support zone once again, going back to the highs on 23 November. This looks significantly more bearish to me here on the daily chart. But once again, do have to keep an eye on this slight reversal condition here. Not as weak as JNK either, just based on the gap fill and the smaller move down that it had. Moving over to the VIX on the 4 hour and the daily chart, you can see this breakout did continue. We moved much higher, got into that 22 area, and that's pretty much where we found rejection. We talked about that yesterday. 21 to 22 was going to be a range where we would probably find some supply. That goes back to the high here on 19 January. Took out that high just briefly and then got rejection. You can see what that rejection looks like here on the daily chart as well. Clear rejection, closed below the 55 EMA on the daily chart. So this does look a little bit weak. You would expect a move back into the trend line. Does coincide with a little bit of a bullish move on equities. Come down, test the trend line. look for that test. If it does look like we're going to hold and then you get the push higher, then you can exit those long positions. But right now, the VIX does fit with the thesis here where we have momentum ticking down, rejection candle on the daily chart, but a couple of points lower potentially to support. It is worth noting that we do have these previous highs here, so it could certainly bounce from here. Doesn't have to come all the way down to the trend line, but it does seem like it's going to, just based on how strong of a rejection this was. Moving over to my results for the day, you can see I managed to make a little bit of money, $178, which is not bad, again, on a day where the market was down quite a bit. At least the NASDAQ was down about $2. The Russell actually managed to turn a little bit of a profit here, and you can see I actually did take a short put position on the Russell. Once again, at 190, I actually sold the at-the-money puts because I do think we're going to get that rally into Monday, but I only sold a $5 wide here put spread, so not a ton of risk. I'm basically risking $400 to make $100, which is pretty good risk reward. I don't think we're going to see a huge sell-off on Monday. Obviously, with CPI coming in on Tuesday, I don't really expect huge moves one way or the other. And like I said, the trend is slightly bullish into the close. Otherwise, about $170, not bad. I think I've been positive almost every day this week, so that's nice to see. Finally making some decent progress there. And moving over to my individual account, I actually closed all of my short share positions. I actually sold some extra shares in the midday and then got squeezed out of those. And then I sold the shares that I had going into the day as well. And then I rolled those 304 puts down and out to 303 for a little bit of a credit. And then I sold some additional puts at 298 for Monday as well. I would expect the 298s to expire worthless. And then the 303s, if we do get a nice push into the midday, I'll probably take these off in the midday. I'm not really sure that we're going to close above 303. I think that would be a little bit too big of a rally. But 298, I think, is probably going to be the bottom. That is basically at the level of support that we talked about on the charts as well. So overall, bullish going into Monday. But like I said, I plan to close all of my positions. I don't want to get assigned any shares going into the CPI announcement. So I will close all of these positions before market close on Monday, and then we'll see what we get, see what the market does going into CPI on Tuesday. Let me know down in the comments section what you think the market is going to do going into Monday. Are we going to rally into CPI, and is CPI going to rocket us to the moon, or is that going to be the end of this rally and we're going to start seeing some new lows going into March and April? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. And with that, let's get into today's jelly. It's been a while since I've done a jelly at the end of an episode, but it is a pretty cool video. If you're familiar with Doug DeMuro, this is his YouTube channel. It's very successful. He does review very cool cars, and he finally bought a Porsche Carrera GT, and it is his dream car that he's been trying to get, and he never thought he would, but he finally got one after many, many years of reviewing lots of very cool supercars. So this is a very cool video of him kind of realizing his dreams. Definitely worth the watch if you like Doug DeMuro or cool cars. He tells a pretty cool story. But otherwise, good luck in your trading and have a great day.